Thanks for joining us on this active morning. I'm Eric, and welcome to Insights. We're going to talk about the foreign exchange markets today, specifically the euro, but we're also going to tie in some discussion on the US dollar index. Everything's moving around. People are finally talking about the dollar, they're finally talking about the euro, and I can bet that they're probably not talking about them in the way that needs to have or the right discussion. The euro and the dollar index showed large opposing energy bills a while ago. The US dollar continued to decline. Everybody jumped on the US dollar bear. And I said, well, be careful with that. This thing has a way of turning, and there's plenty of energy there. And there's also plenty of energy, bearish energy on the euro side to knock this one down. And when it does, it's going to fuel an impulse and it's going to fuel a primary trend flip. And following the primary trend is the basis of the evolution of the trade. Anyone who's watching this video, since this is open content, we follow the evolution of the trade. It's a trading discipline that follows the fractal nature of the trends, daily, weekly, monthly alignment, but primarily focused on the monthly trend, which we call the primary trend, up or down. We follow that, we build the core position, we trade around that core position. Trading around that core position has to do with energy. It has to do with cycles in general, both the price and time cycles, which we can see a few of them here. The US or the Australian dollar, for example, has been down for 64 days, and it's due for some type of a pause, because this is almost a 4 standard deviation cycle in the daily. So those are the things that we focus on in order to take profits, adjust our position. But in general, we follow the core position, or we hold a core position up or down relative to the primary trend until the primary trend either flips in the opposite direction, gets old, or either extended in the price cycles or the time cycles, and then we take profits and we exit the position. If you're lucky, you hold if you're going to short the euro when it flips down and this one goes to maturity, say this one goes to a 2 standard deviation time cycle, which is extremely rare, you'll have made a lot of profits by doing so, because the power of time is always in the hands of the person who can remain patient long enough. It's one of the reasons why Warren Buffett has such a large pile of money, because he knows where to park his money. He follows probably the invisible hand from his perspective, and he lets time do the work. So let's take a look at the euro in particular, and let's focus in on it specifically. We have some of a breakdown of a smaller trading pattern. I'm sure this is attracting a lot of attention. This is not even that big of a deal in terms of the evolution of the trade. And this is minor noise. But if this breaks through this gap here, and we're going to talk about that in a second, just a little bit low when we talk about reversals, I think we're going to hit at least the lows. What I would suggest subscribers doing is taking the coil, go into the coil, click this link in the geo forecast portion of your own matrix, and you're going to find out where the price targets are going to be, and they're probably going to be a break of these lows. So, but we have to find out whether or not this is valid. For this to be valid, you have to have the primary trend flip down. So this is going to have to turn into a 2. This is going to have to be highlighted green, and it's going to have to do so as now we're going to be entering kind of a weaker overall period for the euro. There's a little intervening uptrend due in September, but in general, it's not too great of a time period. It also could have very little to do with seasonality. Could have to do with social and political setups that are taking place onto the European continent, of which we've talked about that before. But really, the euro is struggling with more than just a daily breakdown. It is looking at triple alignment across the board, 3 time frames. They weren't not too long ago. They were compressed. It's still compressed in the Swiss franc, which means that the 3 time frames are showing very low volatility. That's often common before big moves. And as we look across the FX, the grouping, we see calm, 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 and calm. There's a lot of compression, which means there's a big move coming. And usually the moves come in terms of the primary trend or where the composite trend is going. So the euro is the Swiss franc trades loosely with the euro. The dollar index is almost 60% dollar euro trade. these high compressions kind of favor. There's an acceleration move coming, and it's likely going to be in the direction of the primary trend. So if we head back, we can take a look at some of the reversals. I'm not too concerned about these support and resistance. I just do this for more of a short-term visual for everyone to look at. Anyone who follows the matrix knows that we follow reversals inside the reversal tab here. If you pull down the euro, you're going to head to the euro, which is FXE right here, and we're going to find the euro, and you're going to pull these numbers here: daily, weekly, monthly reversals, and these are the weekly. And I want to draw some close attention. We're going to zoom in on this as best as we can. I know the resolution's not super great, but we're in a congestion spot right about here. And here's the red. Reds are reversals, supply demand zones above price, and green are supply demand zones below price. This band right in the middle is a little bit red and it's a little bit green. What I will throw out there and suggest that is once we take out, if we take out that lower green reversal, and I will probably comment on that particularly for subscribers a little bit later, we're going to hit an air pocket that's going to take us down into this band. I suspect that once we get through this second top green line here, it's very narrow, price is going to accelerate rather quickly into this band. That happens, it's the process of moving between zones or air pockets that don't contain supply demand zones. Once you get through one, the other one pulls and it tends to rally very quickly and fall very sharply. And the euro is set up to fall quite sharply. Here's the euros. Well, this is the major currency, DI, that I talked about earlier. I've we long harped on it. Everybody was subscribing to the Matrix and read the dollar index reviews or anything knows that this has been a large bull head. It sent DI2 and DI well above 60. This is a powerful energy build. And for a while, it wasn't being ignored. And I said, well, don't pay attention to that. And then everybody started turning bearish on the dollar index and it was going to go lower. And I said, this is going to get unwound. Slowly as it starts to unwind, it's starting to turn the dollar here. And then what's going to happen is you have a bearish, it's going to turn and you're going to turn into a blocking dome, which is not uncommon. Now, I don't want people to think, well, that's it, then the dollar's not going to rally. Well, if this flips the primary trend, and it likely will do that within the end of this month or as early as October, and I would think that it's going to be more of the end of this month, you can see that how we've had strong energy builds and an energy build here or an energy build that's let's say we'll call around here. These energy builds are fairly significant. They turned, and as the market turned, it jammed right into a blocking dome. Then it grinded sideways as the invisible hand probably took profits or tried to slow the advance. But since the power of the primary trend and the composite trend were all aligned, it powered through that anyways. And then it ultimately relieved that, created a few more bullish builds right here, and then it sent the market a little higher. The fact that the primary trend is going to turn into a blocking dome, we've seen this before. It likely, the odds are only about 10% that the flip is going to fail, and I suspect it will continue to trace higher, potentially test these all-time highs or even break above them despite the blocking dome. The blocking dome will just slow the rally. And the same type of discussion can be made for the euro. The euro had a huge bearish energy build right here, and it was ignored for a while. And I said, well, be careful. We've seen this before. Here, there's bearish energy builds, bearish energy builds. The euro continued to rally, and then all of a sudden fell off of a cliff. We've done this before. The energy build is being released, and as it's getting released, I haven't put it in yet, but there's the green cup that's forming as the euro appears to be rolling over and as the primary trend is in a position to flip down. This is a supporting cup, the opposite of a blocking dome. We saw them here. There was a whole bunch. I didn't put them in here, but there's a whole bunch here. There's a whole bunch here. You can see there was a whole bunch right in, well, if you look at them, they're bullish areas. There was some right in here. They're all, it's not uncommon for the invisible hand then to flip that position into the primary trend flip, it slows the decline somewhat, and actually the euro tends to power right through them, unlike the dollar index, which is composed of other indices as well. I keep an eye on the major currencies more than I do any one of them, but the euro is what we're talking about here today. The support cup that is being generated, this bullish energy build, it will grow inside, but it's not. If the primary trend flips and holds and organizes and it maintains its composite downtrend, which is the 3 time frames aligned down, I don't suspect that the supporting zone will stop the rally. I think the rally will continue lower and will probably take out these lows. And again, I'll provide some specific targets later, but not right now. We're just talking about the general discussion. So don't be concerned that this bullish energy build is somehow going to reverse it quickly. That's not how it works. It's the odds favor continuation of the move down. The evolution of the trade is a primary trend following technique with alignment of the 3 time frames. Energy builds within that just either slow the advance or they eventually reverse the advance, but it's going to take a massive energy build to reverse this downtrend, and it only is going to be successful when the primary trend gets much older than it is today. Age of the primary trend or the time cycle is important to know when these energy builds are appropriate in order to flip the trend. That's why we always study, we're looking for primary trend decline in order to track an energy build for a nibble in the opposite direction. We don't nibble everything because it's if it's against a early primary trend, the nibbling process is usually a waste of time. You don't want to short an uptrend in a bearish energy build that causes a sideways correction. You're going to have to wait either for that primary trend to flip down, or you're going to have to wait for that primary trend to get old in terms of the time cycle. And this one's going to be very early, so that will most likely, like this setup right here, power through it and probably test this lower end of the range. So in terms another aspect of the trend, or in terms of a trend that studies the participation of the public and private money, or professional money. It's not private, it's professionals. It's located here in the pro charts. We'll take a look at the Euros pro chart, and I do that by clicking this link right there. You're going to get a chart that's updated on a daily basis like this. And what we're looking for and what we're seeing is that we're darn close on the pro index of actually breaking through the low already, establishing a low, new lower lows. This arrow will go down. So there's a lot of professional selling that's taking place. And a break below, keep an eye on this, a break below this zone will open the door to even more selling. And even the public is selling the euro, which is quite damaging because they usually keep buying into declines, but in this case, it's both professional and public selling. There's a wholesale exit out of this. That's why it circles back to the US dollar, which is showing high compression. The euro, Swiss franc, we have the Australian dollar. Even though they have energy builds, and this is a large energy build, it's just a supporting cup. As the primary trend flips, it'll probably hold back the decline a little bit, slow it down, make it a little easier for the bulls to stomach. It's usually getting the right people out of the trend, but since it's such an early trend, it's unlikely to be successful to flip it. So this is showing up across the board. Eventually, it's going to hit the British pound and the Canadian dollar as well. Once this gets organized, the real question is why is it getting organized? Why is the US dollar starting to rally here into the fall? Is there something wrong with the economic argument? Is there something wrong with the wholesale discussions that are taking place on mainstream media? These are all questions that I think we're going to have answered. I have my own opinions about what's going on, but they're just opinions. You don't tune in here to find out what Eric's opinion about the situation. There's enough of that on the internet. Go search that around, and you'll get 16 opinions in about 5 seconds about why things should be doing that. And then you have a lot of angry responses and follow-ups of why that person's angry that it didn't take place. We don't care what I think. I don't care what you think, really. I mean, this is nothing personal. This is all about tracking the invisible hand. The invisible hand is not worried about what you and I are doing. All they're worried about is doing its own thing, and it's our job to track it. So from a standpoint of these flips down, the euro and Swiss franc are very closely tied to one another. These flips are early cycle. You can see it here. It's marked here. It's marked early. The X bar is green and below zero. If these things organize into a flip at the end in the first day of September or so, this holds through the end of October or August, we're going to have a sea change taking place. The market, I'm telling you, if the bulls are going to restore the euro and the Swiss franc and the Australian dollar and all that, and all these markets that are moving in slightly different cycles, but in general they're moving together, they better do so very quickly. Otherwise, this trend's going to get organized, and then it's going to take a lot of work to stop. It's going to take numerous bullish energy builds and bullish cups, and we'll take a look at that. And I'm talking about the bullish energy builds and the major currencies composite DI here. It's going to take numerous bearish energy builds here to flip the dollar back down, or it's going to take numerous bullish energy builds in the euro, and you can count them. Look, there's a huge long one for this whole time it tried to stop the euro's decline. And it wasn't until we had like some of a hiccup right here and here, which ultimately was a little bit more successful, but realistically, the euro continued to decline from here all the way down to here. At some point, they're not going to be able to make a shoestring catch on the euro because of the structural problems within the eurozone that they never addressed. And again, that's not the point of this discussion. If you guys want to talk about that, let me know, or we can talk about that on the internet, blog, or privately. These are all things that are related to what human beings are doing in the structure and confidence. And that the point of confidence brings us again to here, down in line 103 of the matrix. Keep an eye on the confidence oscillator. That's right here in 103. This was a major move down. If you're a subscriber, take a look at the confidence in terms of the confidence review that was done. But I'm going to show you one more thing before we end this review here. And I'm going to see if I can, and it's right down below here, and I left it. There's another measure of confidence, and these are all things that are suggesting a flight of capital back to the US dollar. This confidence is located measure, and there's more than one. A confidence oscillator is the best, but this is located in the correlation of trend disconnects right in here, in this area here. I'll highlight it right here, and it's right here. It's the US dollar gold correlation, and it just is looking to find out if the US dollar and gold can link up. They tend to move in opposite directions, a negative correlation when the world is normal and confidence is basically static or stable. But we can see that they will start to link up again, close above the zero line or trend higher when confidence starts to fail. Notice how many of these red boxes are generated during up phases in the gold market. That's because the US dollar and gold are linking up and starting to behave abnormally. That happens when confidence in the structures, the systems, the governments, the proclamations, whatever you want to call it. I mean, that's when it starts to fade. You're also going to notice it in a bear phase here and down on line 103. It's right here. The confidence is in a bear phase, and it's going to be, and it's discussed here, it's talked about here. As long as this thing is over here rather than here, the path of least resistance is up for gold. I'm not sure what it's going to mean for the stock market. As long as people are confident in the US dollar and want to diversify in the stock market, it could mean that the stock market won't crash. But it could translate over into the rally into the bond market, of which people said the bond market was dead too, and I think they're going to be wrong on that. I think the bond market is dead longer term, but it's going to take some time. But really, the euro is a market that's setting up to fall, and I think that's the take-home message here. If we go back up, I want everyone who subscribes to keep an eye on this. I want to make sure that this flips over in September. We'll talk about it further. I want you to keep an eye on the US dollar index. Everything is compressed. See how this goes out. We want to see if these things flip, and and everything's early. So this is a sea change both in the investment backdrop and just the discussion that's taking place out there. And I could give you numerous reasons why people are starting to lose faith, and I'm going to keep them to the economic side of things. The economy is slowing down a lot faster than people expect. And I'll do another review at some point, but it's down in here. The economic activity composite, that ITCO, is zero. It's about ready to go negative, which is the intermediate term. This is long term. It's barely above zero. The economy on the margin is slowing quite quickly, much faster than mainstream media will admit. So I want you to consider taking a subscription to the Matrix to watch all these things. I keep saying things are changing here in 2021 much faster than people realize. And I think it's going to leave people with their jaws dropped if you're not prepared. And this is not about throwing this out there so we don't have the right discussions. The computer inside, which I call this the matrix, is going to force those discussions. And I think for the first time, you'll be talking about things and being prepared for things that you thought you would never be able to do. If you have any questions about what we talked about, contact me back at the blog. I'll leave some links below the video. Subscribe to the YouTube channel to catch us if you with other stuff that we post. I'd like to see that subscription grow. I know you guys can't, are not huge fans of a lot of that stuff, and I don't blame you, but for now, we still need to communicate with one another. We're going to keep these discussions on the financial markets, and we're going to keep watching the foreign exchange. And you can't do that unless we stay connected. Stay connected back at the blog, stay connected on some of the social medias, or use the YouTube channel. Again, these are all links that are located in the video. If you like this video, let me know. If not, well, I guess you can let me know too. It doesn't really matter. I think these videos talk about things that nobody wants to talk about. So in general, they probably aren't well liked, but they force a discussion that needs to be had. So thanks for watching the video. Don't get lost in the daily news grind. Keep an eye on the matrix and come back whenever you can. So thanks for watching, guys.